Good morning. Today, group number 8 is going to be presenting MetLife, and the members of the groups are Deborah Mejia, Janet Ray, and Richard Callender. What is known as MetLife, it was initially formed by a group of New York City businessmen who were able to raise $100,000, and as a result, a new agency was founded, and it was named the National Union Life and Limb Insurance Company. This new company's main objective was to ensure that Civil War sailors and soldiers with disability, due to the wartime, wounds, accidents, and sickness. Later, in 1868, the company decided to concentrate in the life insurance business. A new company was chartered to sell ordinary insurance to the middle-class people. A new name was given to this new company, and it was decided to be Metropolitan because of the significant success that the company had found in that area of the New York City. That is how Metropolitan Life Insurance, Inc. was founded in March 24, 1868, and is known as the holding company for the Metropolitan Insurance Company. It is structured as a mutual fund, but in 2000 it went public, so it became a publicly traded company. It is known as the largest insurance in the United States with more than 3.3 trillion of life insurance in force. This company offers savings, retirement products, and services for individual, small businesses, and large institutions. The company also offers its services mostly in the countries of the United States, Latin America, Europe, and Asia Pacific. This company is traded in the New York Stock Exchange under the symbol of MAT. It is also part of the S&P 500 index. The most common product offered by the company includes term, whole, and universal life insurance along with annuities. Some of the services that the company offers are divided in different segments. These include the institutional segment, the individual segment, the international segment, and the auto and home segment. Now let's talk about how is MetLife doing today. The company is helping millions of customers to create their own personal safety net regardless of the downturn of the economy. It is doing this as a way to alleviate the customer's financial burden by listening to their needs. This company has a well-recognized brand name, a leading market position, and a financial strength, which will help the company to drive a future growth for the company. Now I'm going to present Richard, who's going to continue with the current analysis and outlook of MetLife.
Current analysis and outlook. Expected earnings for the end of 2008 were a little off of the earnings for 2007. For 2007, the earnings per share were $6.01. Expected earnings for the last quarter of 2008 were between 5 cents and 20 cents. The company earned 19 cents at the end of 2008, which is better than they had expected. The earnings for 2007 were much better than 2008 due to better economic times. In 2009, the plan is called underwriting results, and also investment income. They want to develop more capital for investment. Also, the earnings are expected to increase for the second quarter of this year in June to about 65 cents, I think, per share, 68 cents per share, and the estimate for the end of September is 76 cents per share, which is about 3 times the earnings per share for the beginning of the year, which I think is a good indication that the company is getting back on its feet and is beginning to grow again. They expect growth for this year to be about 4%. Deborah's going to talk about current trends.
We're going to look at the most recent quarter that MetLife has had, ending March 31st, 2009. Looking at management effectiveness, we see that the company's return on assets is at 0.56%. The return on equity is at 8.26%. And when we look at the company's profitability, we see that their profit margin is at 4.95%, and their operating margin is at 9.41%. Looking at the company's stock price over the last couple of years, we can see in the chart that from 2004 to 2007, stock prices have been steadily increasing, and in 2007 there's been a drop that has continued through 2009, obviously because of the current economic crisis. Here we have MetLife's income statement dated March 31st of this year. When looking at the statement, we see that their quarterly revenue growth is actually negative 10%, but their gross profit is $50.99 billion. Looking at their balance sheet, we see that the company has total cash assets of $31.24 billion, and that their current book value per share is $28.247. We're looking at MetLife compared to some of the other insurance companies in the industry. We see that based on return on equity, MetLife is one of the leaders, coming in at 8.26%. When we look at MetLife compared to the rest of the industry in reference to the quarterly revenue growth, we see that they're one of the laggards in the industry. They're coming in at negative 10.10%. And when looking at the company's total revenue compared to other companies in the industry, we see that they're at the top with $49.8 billion in revenue so far this year. Now I'm going to go into the company's SWOT analysis, which is their strengths, opportunities, weaknesses, and threats that they face. First, their strength is their strong reputation. The company has been operating for more than 140 years, and it's currently the largest, most respected life insurer in the United States. They also have high levels of customer satisfaction. According to surveys, over 95% of customers rate their experience with MetLife as excellent or very good. And also, MetLife's diversified business mix is a strength that they have. They have a strong capital position and a conservative investment portfolio. Some of the opportunities that MetLife has is the fact that they're geographically diversified. They have operations throughout the United States, Latin America, Europe, Asia, and the Pacific regions. MetLife has been looking into the emerging markets that are rapidly growing in Asia and Europe. And also, MetLife has been looking into merging with other competitors to get an advantage in the market. Some of the weaknesses that MetLife currently has is a decline in revenue. Last year, their operating profit margin fell, and they lost 3% in 2008. And some of the threats that MetLife is facing is their current financial crisis, the high operational costs that many companies in the industry have been facing, and the default risk due to the economic and financial position of customers and the credit crisis. So now I leave you with Richard, who's going to go into the employment opportunities and
These are the employment opportunities at MetLife. I got on the internet. Each of these is different departments from administration to wellness. And I looked some of them up for the actuarial. 3.3 GPA is required with a math major. Claims department requires a bachelor's degree for a job. Finance department requires a bachelor's degree. Investments requires a 3.2 GPA. Underwriting requires a bachelor's degree. Wellness requires a master's degree in health and fitness. All these are the opportunities for the positions. I think someone with a a degree from FIU is going to be standing in a much better light to get a job for MetLife if he has a college degree. I would like to thank you for listening, and this concludes our presentation.